Welcome to BitBoy Crypto, the people's channel, home of the Bit Squad, the largest and greatest crypto community in all of the interwebs. And on this channel, guys, it's our goal to help you guys find financial freedom through crypto assets. My name is Frankie Candles, and I'm gonna be your fill-in host for tonight. Shout out to DZ. But guys, we have an amazing show for you tonight. We're gonna be talking about some pretty good topics, and we've got the best panel here. Starting off in the bottom right, we have MineyourBiz. Looks like he might be busy mining right now, but hopefully he pops in and joins us at some point. But then in the top right, we have Mac and Cheesy. Fun fact, me and Mac and Cheesy are from the same town. Thanks for being with us, bro. Appreciate you. And then in the bottom left, we have none other than RiceTVx. Thank you for joining us. We appreciate you. And last but not least, in the top left, we have Cowboys of Crypto, dual wielding those revolvers and that awesome cowboy hat. Absolutely love it. But again, guys, we have an amazing show for you tonight. We're talking about Raoul Pal looking at an indicator that might be showing some bullish signals. I know that's the hot topic. Obviously, we have the CPI data coming out on Thursday. Are we going up? Are we going down? Hopefully, we can find some clarity here. And then we have banks potentially getting into or offering crypto features here. And then we have Google partnering with Coinbase, partnering with crypto, partnering with Coinbase. So before we get started here, guys, let's go jump in and do a market watch here. Let's get that black and white plane flying around the globe. We've got Bitcoin coming in at $19,027. I am on Coin Market Cap. Technical difficulties.
Feed me the wrong screen. Oh, well.
All right, well, technical difficulties. I will continue on here with the market watch real quick. Bitcoin coming in at $19,027, down about 1% on the day. We were flirting with the 18,000s just a little while ago. My shorts are paying off. Ethereum coming in at $12.82, down about 2% on the day. I'm being approached by a wild BJ here as he tries to get this fixed. But we'll see if we can get this fixed. But guys, by the time, okay, there we go. All right, we'll let BJ. Yeah, okay. BJ said we're breaking out the charts. We're breaking out the charts, guys. Let's see. Can he cut it? There it is. All right. So there you go. Bitcoin coming in at $19,025 now, down about 1.1% on the day. Ethereum coming in at $12.82, down about 2%. Like I said, Bitcoin flirting with the 18,000s earlier today. Are we going to hold that key support? Our first topic, talking about Raoul Pal's indicator, might be able to give us some insight here. Now, obviously...
Raoul Pal. Sorry, I thought you said RuPaul. Sorry.
Oh, no. Close. Easily mistaken. But macro guru Raoul Pal says ETH and the rest of the crypto markets could witness wild price swings in the coming weeks. Pal pointed to his D-Mark technical indicator, which aims to detect the directional trend of an asset by comparing the most recent maximum and minimum prices to the previous period's price. And these are flashing reversal signals for a number of different assets, right? And according to Pal, the DXY appears poised for a trend reversal this week after printing a D-Mark 9 count in an uptrend, indicating a sell setup, and that is for the DXY. So he is expecting somewhat of a move up here in the coming weeks. Now, he did actually warn of a potential sell-off during the CPI data. When that comes out, could cause a little bit of a sell-off before we get a move to the upside. But with that being said, Mac, I want to throw it right to you. Now, Pal has some bullish indicators flashing on his charts right now. But I know there's some people out there that are not seeing too many bullish things. I am looking at a couple of things, but what are you seeing? Are you kind of seeing the same thing? Do you see some bullish things setting up on the charts, or are you kind of expecting some more doom and gloom here?
So what I think from crypto as a whole, we've almost gotten a little numb to relatively good news. Like we hear about people just building and kind of expanding in the crypto space, that this same news 4 years ago would be like crazy news. We've kind of become numb to it. And from my side, what am I seeing? Well, personally, I'm just risk off for the moment, and that's going to be for the foreseeable future. That's just how I want to play. And I think everybody's kind of circumstances are different, right? So it's okay. Are you ready to kind of enter the market? I was listening to Chamath a couple weeks ago, and him and his billionaire friends were talking about how they think the bottom's in, but they have the opportunity to kind of handle some market volatility. So depending on what your circumstance is, that may change whether or not you're ready to ape into the crypto market. But I do think we've been relatively stable for 6 months, maybe, like since the Celsius crash, and like, we had the full capitulation. We've been trading horizontally in this 20K 19K range. So if you're accumulating over time, it doesn't seem like a bad place to kind of continue to buy.
Yeah, absolutely. I would agree. Obviously, the price action is not the most exciting, kind of rough for the Frankie Candles channel. But, again, it makes for a really good DCA period, right? This is a great time for me, at least. I have been DCAing a bit into the market, not going all in case we do get those lower lows. But, typically dollar cost averaging has proven to be a winning strategy over time. But Rice, I want to throw it over to you. Now, obviously, there are a lot of traders eagerly awaiting the CPI data. Some people are pointing up, some people are pointing down, for the future of this market, or the near future of this market. And a lot of people are waiting for the CPI data to kind of determine this. Do you think the CPI data is going to come out bullish or bearish? Are you leaning in one way or the other?
Honestly, I really don't have any clue. But once, I do want to thank you guys again for having me back on.
Of course.
But looking at past data, I really would think that we're either going to remain around the same, or we could see a slight increase because of what's been going on. When you look at the whole macro situation as far as the economic climate globally, and you look at what's happening over in England with the British pound, and you look at the UN's warning, the IMF is currently meeting. We have PPI data, which is your producer price index information, coming out tomorrow. The CPI report on the 3rd. We have the job report on the 28th, and then the next FOMC meeting on the 1st and 2nd of November, with the 2nd being the day that they will let us know what the Fed is going to be doing. Will the Fed pivot? That's the big question, because again, the UN is putting pressure on the Federal Reserve. The strength of the dollar right now is causing a lot of turmoil around the rest of the world, because the way the DXY, the Dixie chart, is judged is based off all the other fiat currencies. So when the dollar is strong, all the rest of the fiat currencies are going to be having problems, which is the reason why you've seen the Bank of England completely reverse course, not only with adding in a new element of QE, but even doubling that. You're seeing a lot of economic turmoil happening all around the world. Now, what Raoul Pal is stating is pretty much the obvious, because the dollar has hit all-time 20-year highs. It's definitely going to have to pull back a little bit. But what direction the DXY is going to take is going to be really determined on what the Fed decides to do. Are they going to pivot? And I'm not really sure. Right now, it really seems like the Fed is going to be staying with their direction, it appears. So it's just going to really depend on how much pressure is being put on them internationally as well.
Yeah, absolutely. And like you said, with the DXY hitting those highs, likely to get some form of a cool off here. But, is it going to be a massive trend reversal where everything else, Bitcoin finally goes off into a big run? That's a completely different story. So I'd have to agree with you there. And we're actually going to give we'll give MineyourBiz a point just for his box. But I'm going to throw it to you, Cowboys of Crypto.
Point.
Yeah, there you go. Participation point. But Cowboys of Crypto, the next one's to you. Now, since September 27th, Bitcoin whales have been adding over 6,000 Bitcoin to their wallets. Do you think that do you think there's something they know that we don't, or do you think they're just kind of dollar cost averaging like a lot of people are starting to do now?
Oh, Franklin, welcome. Thank you for having me back. Welcome to the channel here. Look, when we are talking about technical indicators like DeMarks, it's just one indicator. I met one time a girl who went through my phone, and she was the first time I met her. She was going through my phone. That is an indicator. Red flag. This might be a good sign. This might be a bad sign, but I kind of like the crazy ones. And that's what we're looking at here. One technical indicator, one data point, one man's point of view does not mean we should be buying in heavily or selling heavily. It's just one thing to paint the whole masterpiece of how you need to look at the picture. Let me paint a broader picture for us, okay? The Bank of England is printing now in a time where we are tightening. The IMF cuts global growth down to 2.7%. It's gonna be negative. They've changed and adjusted this rate. In January, they said that global growth will be 3.8, October 2.7, and now or in July 2.9. It's 2.7 now. It's going to be negative. And the reason why this is so important is because when all of this comes crashing down, Bitcoin is coming with it. We have not seen the bottom yet. CPI comes out this Thursday. It's expected to be 8.1 by JP Morgan. Anything above that is going to crash the S&P. UK's doing stimulation and tax cuts. And I think weaknesses will be exposed here. I think a lot of that is coming down. Even if Bitcoin whales are adding to their pockets, I think they're just playing it safe. They're whales. They could do it right now. For someone like me, I've got a smaller bag. I don't know what's going to happen. It seems a lot more volatile. I'm with Mac and Cheesy. I'm playing it safe. I'm staying out. Why? Because crypto is more volatile than an ex-girlfriend stealing your phone. And what is she wearing? She's wearing parachute pants because we haven't seen the bottom. More pain to come. We haven't seen the bottom yet.
I absolutely love it.
When I want to add it, when Mac and Cheesy said that what he's doing is basically being risk off right now, is keeping your assets in dollars. Would you agree with that, Mac?
Yeah, I'm holding more cash than I've ever held.
And a lot of investors are in that position, and it's not a great thing to say, but it's the strength of the dollar right now, and it's the one thing that everybody is kind of flocking to. And again, I've always said the strength of the dollar will be the death of the dollar. And you can see why I'm saying that with what's happening around the rest of the world.
Yeah, absolutely. And Cowboys of Crypto, I love what you said. You know, it's just one indicator. You want to do a little bit more analysis than just looking at that one indicator. You know, if it was that easy, I would just buy that indicator and trade just based off of that. And I got to say, I like the crazy ones too. I'm actually kidding. Don't tell Mrs. Candles, please.
Well, the thing is, Raoul Pal has used these marks previously, and he's been wrong. October 2021, he incorrectly timed the top of the market, and he might be doing so today. He's much smarter, much wiser, better looking than I am, but it's just one man's point of view. We should all be taking a broader view of the market to decide. And for me personally, I'm also holding more cash than I've ever have before.
Awesome.
Well said.
Great answer. Now, I do want to move on to our second topic, and that is America's oldest bank, BNY, moves to custody crypto. Now, the longest standing bank in America has announced it will be able to custody cryptos like Bitcoin and Ethereum. This service rollout will be available today for select investment firms, according to the Wall Street Journal. And this is the interesting part. BNY says they will store their clients' private keys for them and handle the back end of everything, which I think is a very, very, very interesting point there, that they want to hold all the private keys and stuff. Kind of a little bit conflicting when it comes to decentralization. But with that being said, Mac, going straight to you now, why do you suppose that banks are only offering these services to institutional clients and not just like retail clients, like the normal people?
At least initially, and I know it may seem kind of counterintuitive to try and roll out a product to your biggest clients, but at least initially, these people are the more educated investors. There is less of them. You can be more hands-on with them. So when you're building out tech features, right, it's a lot easier to build out something for 1, 2, 3 different people. And I know there's more institutional investors in these products, but it's easier to build that out than it is to build out a product that has to service millions of users. So figuring out the kinks for those people is, I think, a necessary evil while rolling out a feature like this, especially in like a traditional legacy bank. Now, I know normally most kind of crypto natives think that a bank custodying the coins isn't necessarily a good thing. But frankly, I think that this is a necessary evil if we want mass adoption, whether it's from institutions or kind of the general public into the crypto eye, because they see what happens with Celsius, they see what happens with Voyager, they see what happens with these more traditional crypto banks, and that isn't necessarily good. So you need to kind of re-strengthen the trust. And the fact of the matter is, a lot of these people have trust within normal banks. So I think a natural progression is for these big banks to start custodying and managing the storage of your crypto. and I think it's a step in the right direction.
Absolutely. I couldn't agree with you more. I've been very open about this on this show and my channel. People bring up the word, when you bring up regulation, but similar to this, where the bank is holding the private key, these things are necessary evils, in my opinion. Again, for the same reason you said, in order to bring in mass adoption, stuff like this, it is necessary evil. I would 100% agree with you. Now, Rice, I want to throw it right to you. Now, what does this say for other banks that America's oldest bank is now, holding and offering Bitcoin and Ethereum to its clients?
I mean, it's kind of opening up the door, obviously, because I mean, this is a very well-established financial institution, and it has its pros and cons. I agree with everything that Max said, 100%. But you got to know the difference between custody and self-custody. People should be educated to those pros and cons and figure out what direction they want to take. I mean, I'm not going to take away somebody's choice, but I definitely don't agree that the bank should be custodying your crypto. I believe that whole philosophy of not your keys, not your crypto. You should be able to hold your own keys, put on your big boy or your big girl pants, take off your training wheels on your bike, and be a grown up and take account and self accountability for the things that you do. The banking system that we have today has made people to be very limited liability and don't even understand how to balance a checkbook, which is really unfortunate. If you look at what happened with Celsius, that's a good example of what can happen to our banks. Our banks are currently failing globally. Look at the Credit Suisse situation. Look at what's going on with Deutsche Bank and all the other speculation. JP Morgan is talking about a dollar crisis. With this being said, the thing that scares me is the bank bail-in laws. Eventually, they will allow for custody for the retail investor, but I believe there's going to need to be more clarity on regulation. But when it comes to the bank bail-in laws, which is going to be where they can take advantage of accounts that are over the FDIC insured amount and basically seize people's funds for the benefit of the bank. So in a situation like this, the institutions will be able to provide a bail-in for the failing banking institutions. And I think people need to take that in mind when it just comes to their funds, because look at what's happening with bank runs in China and in different places around the world. I mean, right now, we're kind of the king of the hill with still technically being the world reserve currency. But a lot of that is shifting and a lot of that is changing. And our spoiled nature is going to go away. And we are going to start to feel the effects and the pain that the rest of the world is currently undergoing and experiencing, unfortunately.
Absolutely. Seeing those bank runs happening, I believe it was in China. Hopefully we don't see something like that come over to America. Now, Cowboys of Crypto, right back to you. Now, why do you suppose that these large legacy entities have chosen to launch these platforms during a bear market when basically, a majority of the people who were originally in crypto are not here anymore? And do you think it's a good thing?
Oh my goodness. We need to come out of the womb, okay? And we need to grow up and, like Rice said, put our big boy pants on and start walking ourselves. BNY Melon, okay, is the oldest America's bank, largest custodial bank with $2.2 trillion in assets under management, $41.7 trillion assets under custody. It has just deemed itself the largest money laundering scheme of all time. Look, they're only doing this to take institutional money. They're not here to protect you or me. They're not here to be the guy who saves us and makes crypto safe and secures your private keys for themselves. It's all a farce. Look, why would I take my Bitcoin and put BNY, right? Busted, nerdy, and yellow-bellied melons around my Bitcoin and protect it when I could take it's the equivalent of taking the combined might of the US Army, complete with boats and planes and tanks and missiles, and I put that around my Bitcoin. That in itself is the Bitcoin network. Why would I settle for a less secure, centralized structure like BNY than I could just use the Bitcoin network? And they're just doing this for money. Like, it's the comparison here. We don't need to sell for less. We need to take advantage or take control of our own futures. Now, we're talking institutional money, but they've been talking about this since April. BNY wanted to move into crypto custodial services back in April. This is just the first part. They're going to move into retail, but the problem is they're just here to take yours and my money. They just want that fraction of a percent like they've always done. This is nothing new. The only thing new is that now we have access to the strongest, most secure network, and that's the Bitcoin network. Cannot be hacked. However, centralized financial institutions are hacked all the time. We've seen it all this year. We'll continue to see it. Don't trust that BNY, just because they're old and big or whatever, can secure your crypto better than you. It's not true. And we need to put our big boy pants on, because otherwise these guys are just going to keep on shaving off little percentages here and there because, they're safer. Not true. Don't like it.
I love that answer. It does seem very interesting that, it almost seems like taking a step back. I like that you described, the missiles and stuff around your Bitcoin. That is the Bitcoin network. I love that you use that explanation. But moving on to our next topic, guys, Google and Coinbase launch new partnership to drive Web3. Now, Google Cloud and Coinbase have announced the launch of a new strategic partnership to help drive Web3 innovation. The collaboration involves Coinbase selecting Google Cloud as a strategic cloud provider to build an advanced exchange and data service. Coinbase will also build its global data platform on Google's cloud's secure infrastructure and leverage its leading data and analytics technologies to provide Coinbase customers with machine learning driven crypto insights, which is very, very interesting. But Mac, I want to throw it right to you. Do you think it's better for developers to be able to work with someone like Google when trying to figure out or integrate Web3 into the internet? Or do you think, kind of clashing the new world and the old world, do you think this is a good idea?
Frankly, I think it's a good idea, but not because it'll actually help developers. I think that developers at Coinbase will be able to figure out how to properly do things and properly build things. I see the Google and the Coinbase partnership more of a, hey, you can build here and we're not going to kick you off. Because one of the biggest concerns with really any crypto company, and this goes from a Bitcoin ATM that's looking for banking to a technical company that's looking for Web 2 based infrastructure, is will their service providers not let them use their service anymore? And that's always a concern that you have while using these traditional Web 2 services. So I see this as kind of a label of confidence from Google to Coinbase saying, hey, we're going to work together and you're going to be able to use our services without us potentially kind of giving you issue with the things that you're doing. Now, in terms of actually now implementing, sure, having some like the Google engineers working with them, I think it really just depends. Will Coinbase have access to those developers, or will they merely be sending them documents on how to store data in their database? Because if it's the former, I think that's a different conversation if they get those resources. But if it's merely just, hey, we'll help you out, that's not necessarily interesting to me. But all in all, this partnership does show kind of the progression of crypto-based companies.
Yeah, I absolutely love that answer. Very interesting to see the old world and the new world collide. And like you said, are they going to get access to those developers? Now, Rice, I want to throw it over to you. Now, when it comes to Google, do you think this was kind of like a money grab, monetary type decision, or do you think it was more of a technical one? And overall, do you think it's good for crypto?
That's a good question. I'm not a fan of big tech. I'm not a fan of Google. It's a necessary evil, unfortunately. And I'm saying this on YouTube, and hopefully I'm not causing a problem for the channel at all. But what I really want to say about this is, one, will Google keep the crypto or convert it to fiat? Because Coinbase Commerce and BitPay allow for the conversion. We knew that AT&T, there was big news about AT&T accepting crypto, but they were using BitPay and they were converting it over to fiat. So what did it really matter? It just gave you another way to spend your crypto. So, and then the other thing is, one, if Google really cared about something like this, they could be doing this peer to peer. They're big enough to do that. They don't need to partner up with another company. So that doesn't make sense. The other thing is, why is Coinbase partnering with Google when they could be technically doing this with decentralized storage solutions like Filecoin or Storage? So I don't understand that concept either. Is it that Coinbase wants to be a part of that club, that we're trying to get away from in the ultimate scheme of things when it comes to crypto? So this is why I try to support as many decentralized projects that are fighting big tech. And one of the biggest solutions for something like that, for me personally, and I suggest it to others, is Presearch. It is a decentralized search engine. We need to do what we can to take power away from these big tech organizations, ABC, Google, YouTube. not give them more power, not give them more relevancy, not spend our crypto for their storage services when it's going to be converted over to fiat. It just doesn't make sense to me. I come from the cypherpunk mentality. I come from the point of truly being your own bank, and all the stuff that we're leading to now is the opposite of that. And, I think with the introduction of CBDCs, programmable money, tracking and tracing, and people just losing a lot of their rights, maybe they'll eventually start to wake up.
Yeah, absolutely. I kind of had the same feeling. It's like, we're talking about, crypto and then, big tech, which is obviously what a lot of decentralization would like to fight. And then you're just going up against big tech. I thought it was very interesting as well. But great answer. Now, Cowboys of Crypto, throwing it right over to you. Now, many in the crypto community believe that the infrastructure that gets built during the bear market helps contribute to the next bull run. Do you agree with this?
Yeah, absolutely. This is not a bear market. This is a build market. If you're out there right now and you're struggling and you're having a hard time, you want to be building something that could take off for you in the next 5, 10, 15 years. It's just what we're putting in today. Now, what I see with this Google and Coinbase merger or this partnership, I just see more power to the people. I agree with Rice here. I think it's big tech kind of easing its way into crypto. However, this is in a way that it's empowering developers, and I kind of like that. It's mixed feelings, and I'm a bit cautious for it. I watched the video of it, and he kind of broke it down into 4 different points. He said data analytics, merchants can accept crypto. New devs can work on the blockchain, and institutional custody. So I don't really like I said, institutional custody. I really like when the devs are able to bring in more talent and collaborate with each other more often, because when more devs are piling into the crypto space, I think they'll be able to build out more in the future. I think it's sourcing a lot of talent from a lot of different places. The developers are not going into old school, trying to develop over here SaaS programs or trying to develop other types of software. They're going into crypto, and this establishes a framework, something where they could work together, especially old school, new school combining. I'm someone who honors the history, honors old developers, honors people who have paved the way and blazed the trail. However, we do need to move into a more decentralized area and against big tech. I totally understand that, and so that's something that I affirm. I like this move, but I do have cautious and mixed feelings about it.
Absolutely. So it sounds like you're cautiously optimistic, but great answer. And you want to remember, the bear market is the time to build. I love seeing, things being innovated during the bear market. It shows that, the important people are still here trying to push the space forward, even though, even in the doom and gloom of a massive bear market. But guys, I think that's all the time we got for tonight's show. That was our last topic. And our winner is RiceTVx. Close one. Mac and Cheesy and Cowboys tied. But Rice, you took the trophy home tonight. So go ahead and we'll give you the stage and tell the people what they need to hear.
Well, this has been a really great show. I really appreciate the guest points of view. I really encourage everyone to check out my channel, RiceTVx, as well as the other guests, and follow them on social media. If you check out my channel, RiceTVx, on my community section, you'll see a link for my new channel that I'm going to be starting really soon. I just got a placeholder. It's at Rice Against the Grain. So be sure to check that out. You can find it on my Twitter or on my community section on YouTube. But be sure to follow the other guests and check out Frankie Candles live at 5:45 p.m. Eastern time.
Rice said it, not me. Guys, again, go follow the guests. The links are in the description down below. And Rice beat me to it. I am going live at 6:15. If you guys want to dive deep into the charts and do some TA and maybe learn a thing or two, go ahead and hop over to the Frankie Candles YouTube channel. Also, link in the description down below. Smash that like button on your way out, guys. That's all the time we got for tonight. I'll see you next time. Frankie Candles out. Bing bong.